Everyone. Welcome to today's Self-Directed IRA Saturday webinar here with Quest Trust Company. I am super excited to have with us today Mr. Brad Sumrok here from Dallas, Texas, but actually joining us from Houston today, here to talk about investing in the post-pandemic world. So if you guys do not know Brad Sumrok, he is one of the top apartment and multifamily educators in the entire country and probably one of the best in the world, to be completely honest. So we're super excited to have him here today. But before we get started, I do just have a couple of quick announcements for you guys here while we let kind of people get signed on, and just to kind of give you guys an update about what we have going on right now here at Quest. So if you guys are not familiar with Quest Trust Company, we at the core of our business are a self-directed IRA custodian. So we basically teach investors how to utilize those old 401ks or IRAs that maybe aren't doing too much right now, and how to really truly diversify the types of investments that you hold in those accounts. And you actually have the ability to invest your retirement account into privately held assets, things such as real estate, notes, and what we're going to talk about today, private placements and multifamily investing. So we're a pretty good sized company. We've been around for almost 20 years now, kind of here homegrown from the state of Texas. We have about 20,000 clients nationwide. About half of those are in Texas, but we do operate in all 50 states. And we actually travel around quite a bit too to visit local RIAs, other conferences, and investment groups pretty much all across the country. So if you guys ever have questions about how you can self-direct your IRA, how you can diversify your retirement account investments, or really just some more resources of how you can get started, please do not hesitate to reach out to us here at Quest. We are an open book. We love to educate investors and our clients all about the different ways that IRAs can be self-directed and how to not only do these deals properly, but how you can best build wealth from the many different types of accounts that can be self-directed. So that's just a quick little tidbit about us, but I do want to give a quick disclaimer. Please be aware that at Quest, we do not give tax, legal, or investment advice. We put on a lot of education. We bring in a lot of different guest speakers because we want you guys to be able to have access to the best education as you possibly can. But please make sure that as you are entering into investments, that you are taking the time to make sure that you have vetted the people that you're working with, and you're taking the time to make sure that your deals have been structured properly. So just kind of have to get that out of the way, but I do want to spend some time today actually on some of our upcoming events and education that we offer. So if you guys have been watching our classes, you know this is just one of many webinars that we host all throughout the month here at Quest. But if you want to rewatch today's presentation, as well as any of the other presentations that we have hosted recently here at Quest, be sure to go check out our YouTube channel. Our YouTube channel is a great resource. It has a ton of short videos, longer videos, all of our pre-recorded classes. And again, as well as today's webinar, will all be available to rewatch on our YouTube channel. Also, on our website, we do have an education center. We have several blogs, kind of tutorials, videos, and we are basically expanding that education center every single week. We are adding new content. So if you're looking for some more literature or reading about self-directed IRAs and the types of investments that you can hold in an IRA, be sure to visit that education center on our website as well. Also, my personal favorite event that we host, at least on this screen here, is our virtual networking happy hours. So I do know that in many parts of the country, the in-person events are finally coming back, and we are so excited about that. But if you guys are looking to network with other real estate investors from all across the US, be sure to join us at the virtual networking happy hours. I actually host a lot of them myself. They're a lot of fun. And at every happy hour, we get roughly about 50 investors that join us from across the US. We have a lot of high-level conversations. And if you're a new investor, this is a great way to meet other people and maybe get some of your questions answered and get some other expertise and advice there. Now, Coming up this summer, we do have a really big event. This is our July Summer Intensive. This will actually be our last online conference that we are hosting for a while. We are officially bringing back our in-person events here in Texas the first week of August. But if you guys are not in Texas, we will still be live streaming everything online, just like we have been doing for the last year and even longer. But if you are looking for a high level event that's going to deep dive into the different investment types that you can hold with an IRA, be sure to get your tickets to the July Summer Intensive. Brad Sumrok will actually be one of our speakers at this event. It's all online. It's 3 Fridays in a row. It's half days. And if you can't make it live, you can rewatch the presentations pretty much at any time. We will have those recordings available to you. Also, guys, if you are currently a Quest client and you have not checked out our online portal yet, be sure to go online and log into your account. We are expanding several features this year in our online portal. You can now actually upload all of your investment documents and information directly online, and it eliminates a lot of the manual work of having to fill out those direction of investment forms, emailing in your documents that have sensitive information on there. If you have not been utilizing these awesome features that we have in our client portal, be sure to do that. We will have several tutorials kind of built into the online portal as well. And it's just a really great way to not only keep up with your retirement account and what is going on in there, but it's a great way to keep your forms and documents secure and encrypted all right there through our client portal. So if you guys have questions, let us know about that. I know I am breezing through this very quickly because I do want to get into today's main presentation, but we actually have a really new, awesome promotion going on for the month of June. You know, I've heard in the financial industry that giving away toasters is the hot thing to do. So that's exactly what we've brought back this summer. For the entire month of June, if you open up an IRA at Quest, we'll send you a free toaster. It's apparently one of the best and most common freebies that you can get when you open a bank account somewhere. And we really thought it was just a fun way to bring this back, have some fun this month. And if you come see us at events, we may even make you some toast there as well. So that's all I have for my announcements, but I definitely want to take the time to make sure that you guys are aware of this really awesome event that Brad has going on next week. All week next week in the evenings, he is hosting an online apartment investing challenge. There are several thousand people that are going to attend this event from across the US. I will be there myself, not only as a speaker on one of those days, but I actually just tune into the event every single day because the information offered on this free online challenge is fantastic. It's relevant, it's up to date. He's got a lot of great speakers coming out for that. And at Quest, we do actually have a tracking code that we're using for people to register. So Katie, who is online with me today, moderating today's event, she's going to send that link to the chat. Guys, be sure to register for the challenge. I'm super excited for it. It's the second one that Brad has hosted this year, and it's completely free. So fantastic there. As you'll see here, if you guys have not heard Brad speak before, he's got a wealth of knowledge to offer. And not only that, but he has created a giant ecosystem of successful apartment investors from all across the US. Guys, if you're looking to get into multifamily, you come to the right place today. So again, at Quest, we can't endorse or recommend, but Brad, we've worked with you for so long. I personally enjoy all of your events, and I make sure that I'm always one of the ones that gets to attend them as well. So guys, if y'all have questions, and Brad, that's about all that I have. I'll go ahead and pass the torch off to you. If you guys have questions, put them in the Q&A box, and we'll come back on and answer them at the end for you. Brad, thanks for joining us today.
Yeah, thank you so much, Haley. And hi, everybody. I'm really excited to be here today from a hotel room, and I am in Houston, Texas. This is where it all started for me. Bought my first apartment building right here in Pasadena, Texas, and just super excited to be here today on the Quest Self-Directed Saturday IRA event. And I got some slides, but I just want to share a few things with some of you. So Haley mentioned this challenge. And I'm excited, Haley, that you're going to be on it. And again, it's a free event. It starts Monday and it goes till Friday. And we just spend an hour or two together every evening if you're in Central Time, at 6 p.m. And so again, it's like 90 minutes a night. And what makes this challenge different than the last one I did, for those of you that did the last one, which was phenomenal, is I'm going to be talking about what's happening right now. And today I'm going to give you some of that information too, about how is it that I'm buying deals right now. My students are buying deals right now. And earlier this year, I closed a $123 million A-class property. I'm buying an $18 million C-class right now. Monday, closing on a $25 million B-class property. And I have another A-class property. So this is the year where I'm not just doubling down. I'm like 5 or 10xing down. Okay. And I know there's people out there talking about an upcoming crash. And some of those people have been talking about that for 10 years. So I'm going to start by reading you an email that I usually don't like to read, but I want to start by reading you an email from one of my peers and mentors, a guy named Michael Becker, that has put together a portfolio of over 10,000 units. And so here's what Mike said that he sent out to his investor database just a few days ago. And this is from Mike. Simply put, this is the hottest market I have experienced in my 20 years as a banker and as a multifamily operator. The Texas investment sales market in multifamily is on fire. There's tons of capital looking for available inventory, pushing prices higher. Now you might say, oh my God, well, that's not good. But let me just keep reading. And by the way, it's really good if you already are invested in multifamily. Since December of 2020, my personal net worth went up $6 million. $6 million from the continued performance and growth of my assets in the multifamily space. Okay, so those of you that are already have money in deals, you're getting richer as you sleep. You're getting richer by the day. Okay, so back to Mike Becker, adding fuel to the fire. We are seeing material improvements in operations. Our portfolio is 97% occupancy across the board. It's the highest point in our company's history. Single family rentals are becoming more and more unaffordable every day. Single family home ownership is becoming more and more unaffordable every day. And the value proposition to be a renter is becoming more and more attractive to the general public. This will fuel the demand for rentals in the years to come. Occupancy is so high, and by the way, supply is not that high. We are predicting 6 to 8% rent growth across our portfolio. Okay. So when we underwrite deals, we underwrite rent growth at 2 to 3% a year. But right now we're seeing 6 to 8% rent growth in a lot of these Texas markets and some of the other markets that we're active in. So now when it comes to buying, this is directly again from Mike. It is my belief that we are on the front end of a strong multi-year run, similar to what we experienced in 2012 to 2015. I am very bullish, and my firm, SPI Advisory, actively plans on expanding our multifamily holdings. Now, this is also what I believe. This is what Grant Cardone believes. This is what another one of my mentors and now partners in a few ventures, Charlie Young with Madeira Residential, that has 15,000 units, believes. So this is the year to get in and invest more. Now, obviously, this is my opinion, and you need to do your own due diligence. but I'm just sharing with you what I'm doing. This year, I'm personally going to invest $7 million into apartment buildings of my own money. $7 million into multifamily deals in 2021. Now, that being said, let me share with you some slides and prove to you why. And I just want to see what's going on in the chat room. By the way, I see Jade Lay out there. Funny, I just saw Jade in Houston last night. But hey, I see a bunch of you watching right now. So let me just hear from you, by the way. If you guys are excited about what I just shared with you, blow up the chat and let me know. Seriously, like, is this exciting to you, or do you think it's a bunch of crap? Like, let me know what you think. Yeah, let me know. All right, Kathy Keller is excited. I know Haley is excited. Larry Chandler is excited. Bob Lawrence, there you are, buddy, is excited. Leah, Chris. Yeah, this is the place to be right now. So I'm going to go ahead and share my screen and show you some more facts and figures and data, because I know a lot of people out there want to see that. And for those of you that don't know much about me, this is a very short background. 2002, right here in Houston, was my first ever apartment building. And it was actually my first ever real estate investment. I started with no previous investing experience, and you can too. Since then, I've had 34 deals, 16 full cycle. I've had over 6,200 units, and I've paid zero in taxes legally since 2018. Started mentoring others on how to become financially free in 2006. And then in 2013, when we launched our current organization, we have bought, it's actually now nearly 40,000 units and actually close to 3.5 billion of acquisition volume. And hundreds of my mentees have went on to quit their jobs and increase their net worth by over $1 million, and some of them by over $10 million. So we've been doing this for a long time. I've been doing multifamily since 2002. And I can say I've never seen a market and an opportunity like I see today. Now, all markets are not created evenly. You want to be looking in the markets with the big green circles. And then secondly, with the yellow circles. These are the markets where people were moving to. And you could see it's generally the Sun Belt markets from Arizona to Texas to Florida and Georgia. By the way, those are the markets that have the best demographic movements, migration patterns, job growth, population growth. And then you can see there's a few others in yellow in the Carolinas and the Rocky Mountains and in the Midwest. When people tell me, Brad, prices are so high, how do you make sense of these numbers? The way I make sense of them is if you look at the spread between the cap rates, which have been going down, by the way. You see cap rates right now for apartments are around 5%, but the 10-year treasury continues to stay low. So that spread is an indication of the opportunity that we have to make a profit. It's an indication. But as we can see, the spread now is healthy. It's as healthy or healthier than just about any other time since 1990. Okay. So that's one of the things that we monitor. When we looked at the beginning of 2021 about how the national economy was going to perform and how multifamily was going to perform, we could see that jobs are coming back to full employment levels, to pre-pandemic employment levels. We could see rent going up. And by the way, this forecast was done in January, where they were forecasting a 1% rent growth. And now I'm going to show you data that is more current and how some of the markets are experiencing, massive rent growth. Okay. when we look at where are jobs being created, these are some of my favorite markets to be investing. Dallas, #1 in the country. Houston, #2 in the country. Phoenix, #3 in the country. Tampa, Denver, Atlanta. These are all great markets to be investing in. One of my other criteria is to be in landlord and business friendly environments. And that's why I didn't mention the other markets that you see listed here that I'm not so keen on. When we look at where people were moving, Houston, #1 in the country, projected for the next 5 years. Dallas, #2. Phoenix, #4. Atlanta, #5. Tampa, #12. Denver, #10. These are markets that you want to be looking into. So my assets, my students' assets, my mentors' assets, everybody I learn from and I'm connected with, these are the markets that we're buying in, the ones that I called out. Now, what happened with rents? If we look at this chart here, we can see rents back in March of 19. There was a big run up on rents between March of 19 and say November of 19. And then rent stayed steady, eked up a little bit. And right before the pandemic of March 2020, we can see there's been a little dip in rents, but not a massive dip. Okay, there was no massive dip. See, the media wanted you to believe that rents went down and the market was crashing and nobody was paying rent. That's not true. This is the fact. This is the fact checker, okay? But we could see since the low point in about May or June of 2020, rents have ticked back up. And if you look to the far right-hand corner, we're starting to see that uptick now in rents again. And we're higher now than we were before the pandemic. So we're at a higher rent now nationally than just about any time before. And this is on a national level. Now, all markets are not created evenly. So the first column shows the previous 12-month rent gains. Business-friendly environments. We can see where, Vegas is picking up. We can see Phoenix is picking up. We could see Atlanta. Every one of these markets that is higher than 2.5% is what I'm showing you here. This is substantially higher than the national average of 1%. Okay, substantially higher. And then I like to look at occupancy. So again, we could see occupancy in the far left corner. At April of 2020, occupancy was 95%. And it actually went up a little bit between April and July, if you can see that slight increase in occupancy. So yeah, during the pandemic, rents didn't go down that much and occupancy actually went up. And now we could see a little bit of drop off, but right now as of the end of February, occupancy is pretty much flat. So multifamily has been one of the most resilient asset classes that in the entire pandemic. Okay, and this is a reason why my net worth has gone up by over $6 million in a few short months. And I own 18 properties, and every quarter I update my schedule of real estate on where we update the NOI and the cap rate, and it calculates the value of the property. And then I look at my ownership position and I update that every quarter. And so just as a multifamily owner, above and beyond anything else I did to earn any money, my net worth went up $6 million since the beginning of the year. So now we have Biden and his team making some, proposals for massive tax change. So they want to increase capital gains tax. to the ordinary rate of 39.8%. And they want to put caps on 1031 exchanges. So the demand for people to put their money in multifamily now and get those tax advantages is higher than ever before. Okay. And our business model going forward may involve holding these properties for a longer period of time. So normally in the last 19 years, I'd want to get in and out of a deal in 3 to 5 years. But if the capital gains tax goes from 20 to 40%, we might see more refinancing happening, because a refinance is a non-taxable event. So what I mean is the value of your asset goes up and we just get out a new loan and we return the money, the new loan proceeds, back to the investors, and it's not taxable. So we're going to be seeing some changes in how we budget our deals, how long we own our deals, whether we sell them or refinance them. These are some of the changes that I see happening in the post-pandemic world. So in the Sumrok Group, we're going to be implementing those changes. We're going to be updating our property analyzers. We're going to be updating them to look at 10-year holds versus 5-year holds. We'll be updating them to model, getting 3-year bridge debt and then rolling it into a permanent agency loan. And of course, we're updating our rental growth numbers and our reversion cap rates to be more in alignment with the market. So our underwriting now, we're using higher rent growth numbers and lower reversion cap rates based on what's actually happening in the market. Okay. So those of you in our Sumrok educational programs, this because I've been teaching it and talking about it recently. So the bottom line is, if you're sitting on the sidelines, you're missing out on a great opportunity. And some people are sitting on the sidelines because they don't know how to get started, and I can help you with that. But some people are sitting on the sidelines because the people they're listening to are scaring them. And I know, some multifamily gurus that when the pandemic hit, they told their whole list of followers, okay, don't do anything right now. Don't buy. There's too much uncertainty. Well, that's not what we did in Sumrok. And I'm really glad. So here's an example. There was a deal that I bought right in the beginning of the pandemic in March or April of 2020 for $21 million. And it's worth $30 million right now in a year, $30 million. So we did an $8 million equity raise on that deal. And it's worth $9 million more than we paid for it. So on our balance sheet, the investors have already doubled their money in 12 months in the middle of the pandemic. And now we're actually looking at refinancing the deal and pulling out additional supplemental loan proceeds and returning a bunch of that equity back to the investors. And it's 100% non-taxable. Okay. So as we emerge from the post-pandemic world, as we emerge into the new regime, I call it the Trump administration and regime too, and we have now the Biden regime. Things are changing. And so what I have done successfully for 19 years is been able to pivot and navigate the water and always come up with the strategy that's going to make us the most amount of money and keep our investments the most secure as possible. You see, if we just keep doing the same thing for 19 years, it doesn't always work. Okay. The way you underwrite deals change, the debt you get for the deals change, the holding periods may change, the projected returns are going to change, the input into your underwriting is going to change. So it's important that you're continuing to stay educated by tuning into an event like today so that you can keep abreast of what's going on, so that ultimately you can make more informed decisions that benefit you and your family. Okay. So that's what we're all about. And that's what I'm trying to give you some updates today. And I'll just say this, if you're sitting on the sidelines waiting for the crash, I guarantee you, mark my words, a year from now, you will wish you had started today. If you think prices are high now, they're going to be higher. Okay. And so by getting in now, you'll be able to continue to ride this demographic shift in these Sunbelt markets where we're becoming more and more of a renter nation. Okay. So let me talk a little bit about the financial benefits. Three main things. You get cash flow. These are projected benefits to a limited partner or a passive investor. Whether you're a cash investor or an IRA investor, you or your IRA will get cash returns based on the projected returns. Okay. Targeted cash returns of 5 to 10%. The value of your investment should essentially double in a 5 or 6 year period. So you put in $50,000 into a deal with your Quest IRA, and that should grow through a combination of cash flow and appreciation to double that in a 5 to 6 year period. Now, these are not guaranteed returns. These are based on what I see on current deals and what we've experienced in the past and what I expect to see happen in the future. And then there may or may not be a tax benefit depending on if you invest with cash or an IRA. If you're investing in an IRA, you've already gotten tax savings on that IRA. Okay. So those are the three things that we look for. We look for the tax advantages, which for those using their IRA are already having a tax advantaged asset or a tax advantaged vehicle. Okay. And those using cash, by investing in a multifamily building, now you're putting yourself in a tax preferred investment where you could reduce or eliminate taxes. That chart, by the way, is Robert Kiyosaki's chart, ESBI, employee, self-employed, business owner, investor. And what I'm showing is that business owners and investors pay less taxes than employees and self-employed people. Now, just talking a little bit about what we are actually doing to win so many deals is, number one, you got to have access to deal flow. Okay. And if you're on the perimeter or on the sidelines of this business and you're going to be like, oh, there's no deals. I can't find deals. I can't find deals, or I can't find deals that work. So how many of you have that challenge? You can't find deals that work. Seriously, let me know if you have that challenge that you can't find deals that work. Put it up in the chat box. Okay. Anybody out there that can't find deals that work? So yeah, some of you don't know, some of you don't want to admit it, but I hear from a lot of my students, they have trouble finding deals. Well, we got to leverage relationships. So here in the Sumrok program, what we're able to do is leverage that fact that we've bought over 40,000 units in 27 different markets. And we have a reputation for being able to close deals. And so the brokers love working with people in the Sumrok group. So we have the relationships with the brokers, we have the relationships with the owners groups. And so people that come into our network are benefiting from that. And it makes it easier for them to get deal flow, okay, by leveraging our relationships and our track record. Now, network of professionals. What I mean here is now more than ever in this post, as we emerge from the pandemic, the people that you have on your team are going to help you win deals or cause you to lose deals. So this goes from, do you have a mentor? Which lender are you using? Which management company are you using? Sellers care about this stuff. Brokers care about this stuff. They want to know that if they award you a deal, that you're going to be able to execute and implement. Okay. And this is not something you could do on your own. for those of you that are new, that are listening, new meaning like new to Sumrok. And, we're not out here buying 5 or 10 or 20 unit apartment buildings. We're buying, at the small end, 50 or 60 unit buildings going up to several hundred units in one transaction. So your success is going to depend on the deal flow that you get, and enable to get more deal flow. You got to leverage relationships. You got to have the relationships with the people doing the deals. Your success is going to depend on the network of professionals. This includes mentors, attorneys, management companies, lenders. Okay, these people are going to help you. And then you need to be part of a community of investors for a lot of reasons. One is that you need to be able to have a mastermind impact. You need to have people around you that are doing what it is that you want to do, and leverage from them and learn from each other. Number two, you want to have accountability. I see my slide. The why is that's funny that I'm looking at that. I don't know how many of you would have caught that, but you need to have people that are doing it, what it is that you want to do. And when you're around them, and if you're not doing it, you got to level up and you got to step up. Okay. That's why being part of a mastermind is so important. That's why being surrounded by peers are so important. Okay. If you're the only one that wants to do multifamily, or you're the only one doing it and none of your peers are doing it, it's going to be easy for you to get out of doing it. So you want to surround yourself with people that you can mastermind with people that will hold you accountable, and you'll hold yourself accountable because you're part of that group, and you don't want to be the one that's not implementing and executing. And you need to be part of a community of investors to do your capital raise. Okay, some of the gurus will say, oh, if you find the deal, the money will come. No, like we're talking about buying 10, 15, $20 million deals. On a $10 million deal, you need $3 million of equity. On a $20 million deal, you need $6 million of equity. So you got to get in with a community of investors and build those relationships now, so that when you find a deal, you'll be able to execute. So some of these strategies are valid, pre-pandemic, post-pandemic, but I'm just telling you, like, how is the Sumrok Group thriving right now? It's because we got the deal flow. We got the trust of the brokers and the seller communities. We got the network of professionals, the lenders, the attorneys. I'm a mentor to many people, but I got mentors. My mentors are 2 levels up from me. My mentors have over 10,000 units. Okay, I have 6,200. I have a mentor that's got 15, 20,000 units. Okay, so you want to go at least 2 levels up from where you're at and surround yourself with those mentors. And so people that come into my program, you're leveraging my mentors because I'm learning them from them, and then I'm sharing that with you. Does that make sense? So these are all the secrets that you need to be successful right now, right now. So as an example, earlier this year, I bought the biggest deal I ever bought in my life. And it's right here outside of this hotel room. I am in City Center, West Houston right now, doing this live event with you. And literally I could throw a stone out that purple curtain and hit this apartment building. It's called the Domain at City Center. And the other one is called the Lofts at City Center. So it's 2 properties, 620 units, paid $123 million, raised $43 million, and got an $80 million loan. Now, I didn't do this by myself. I teamed up with one of my mentors and bought the deal with them as a co-general partner. And that's the name of the game. Is you got to partner up with people. You got to, as an LP, a limited partner, you got to partner up with great operators and general partners. And even as a GP, a great strategy that I teach my students is to be a co-GP and partner up with other GPs so you can do bigger and better deals and do them faster. Okay. So velocity is the name of the game as well. Now, I want to share with you a little bit about the Sumrok Mission. It's big, and we're already on our way to impact more than 1 million people. Somebody here this morning, and I spoke at one of my students, they have an investor conference. One of my students has grown so big, the Garzas, that they have their own investor conference now, and they asked me to speak at it. And there's 90 people in the room, and most of the people that invested with them came through my ecosystem. And they're like, Brad, look, we have 90 people here that are investing with us. This is the Garzas telling me this. There's 90 people here, but what you're not seeing are their spouses that aren't here, or their children that are not here, or their families that aren't here, or the tenants at our buildings, or the employees that we've hired to take care of our buildings. And just from one of my clients that I refer to as students, we've probably impacted 5 or 10,000 lives. And so we are well on our way to impacting 1 million people. Okay. So these are not just direct people that I mentor, but people that we're impacting along the way. And so that's what my life is all about, is helping you achieve financial freedom, investing in apartments, which, by the way, have been and continue to be one of the best investment vehicles on the planet. I have a proven process that we follow. That does it guarantee success? No, but we have an extremely high success rate, like 97% of all the deals that my students have done over those 40,000 units have met or exceeded investor projections, 97%. Okay. So you're in pretty safe hands if you get involved with the Sumrok ecosystem. Again, no guarantees. There's always a chance that something can go unplanned. Okay. And sometimes it does. But by following a proven process and continuing to strive for, seeking out guidance and mentorship and how to level up and just keep doing it better, that's what we're doing here at the Sumrok program. So I want to invite you guys to come to our next event, and it's our 4th annual Apartment Investor National Conference. This is the one event you want to be at. This doesn't matter if you're brand new or if you've been doing apartments for years. Okay, we got some great speakers coming, and I'm working on getting some more. And so it's an in-person event in Dallas, 3 days in person. And we also have a virtual option. So if you don't want to travel, you can't travel, you're not comfortable traveling, secure a virtual ticket. But we will conduct and treat this event as an in-person event, meaning I'm not going to be speaking to the virtual screen. I'm going to be speaking to you in the audience. And then I'm also going to have cameras to still, connect with the virtual attendees as well. So, Damon John is on his way to Dallas. Cardone is going to be coming in virtually. He can't make it to Dallas. So some of the speakers are going to be there in person, and some are going to be there virtually. And there's a whole lot more to come about this event. So you want to be at this event, because this is an event where you're going to learn from my mentors. So the Rat Race event, which I also do, and it's a great event, you're there 3 days learning with me. At the Rat Race event, you learn 3 days from me. At this event, you not only learn from me, but you learn from the people that I learn from. And so this is the event you want to be at. These are the ticket options. The virtual is $97. And then we have 2 in-person experiences. We have the general admission experience for $397. And then we have the platinum. And the platinum, you get better seating. You get a photo, like, the first 100 platinums are going to get their photo with Damon John. Okay. And we got to cap that at 100 because of our agreement with him. Okay. So the platinums, you also have better experiences at lunchtime, and we have special content sessions just for the platinums. Okay. So there's a lot of benefits to being in the platinum attendee group. Okay. And if that's not for you or you're not interested in that, do the general admission. Okay. So one way or the other, you need to be here with us and with me and with my mentors in Dallas. So that's how I want to conclude. I want to take questions at this point, and you could go ahead and take a photo of that. And Haley, let me also put the QR code if I can. Well, I can't. I tried cutting it and pasting it and putting it in the chat box, but it's not working. So, but that's it. That's all I got.
Mm-hmm. Awesome, Brad. Well, it's so great for you to join us today. And I always love hearing about what you have going on, and especially the updates, as so much of this data has changed over the past year. And one thing I will let you guys know, that VIP for NatCon, from what I've seen from Brad's events, those sell out extremely quickly. So those VIP tickets, if you're interested in that, don't wait, because they probably won't be available for long.
Well, it's funny you said that, because I don't like to use scarcity as a tactic, but the truth is,
true.
the truth is we are nearly sold out of the platinum tickets. And that's just because the people, the talent that we have coming, they can't get pictures with 700 people or 500 people, or there's another guy that's coming and we may do a book signing or something, and we can't do it for everybody. So I'm just telling people that you've been to my events before, you know what we do, you know how awesome they are. And I don't want to say it that way, but you got to get that platinum ticket if you want the platinum experience.
Definitely. And Sherry also just gave a great little endorsement for you here. She didn't send it to all the attendees, but I do just want to read this really quick. Sherry says, I've known Brad for over 12 years. He is the real deal. His program has all the pieces to make it happen. And yeah, basically just there's a bit more there, but I'll let you guys see that if you want to. So
yeah, I'm reading it too. It says, is it easy? Well, look, it is hard work. I'm not going to lie to you. It's hard work. Anything worthwhile is hard work. I'll tell you what's hard work is going to your job every day for 40 years, sitting in traffic, bitching about your life and complaining about it. That's hard work. So choose your hard. Your hard work is acquiring a skill set, leveraging my experience. I could shorten the time frames for y'all, and it doesn't have to be that hard. Okay. So, hey, I got a couple questions. We are going to do the event most likely at the Downtown Fairmont Hotel in Dallas. Do not book your room there yet, because we're going to have discounted rooms available. Okay. So I see that as one of the questions. Yeah, I love what Elaine Kamura said. She goes, being a passive is easy.
Yes.
And that's another option for you. So I don't know, Haley, how do we want to do this? Do you want to read some questions to me or what?
Yes. Yeah. So I'll be reading these from the Q&A box, and we've got just a few here. But Brad, you had a lot of data in this presentation. Where exactly did you pull all of this data from? Was one of our questions.
Yeah. So one of them came from Yardi Matrix, and Yardi Matrix is one of the top data analytical firms that specializes in multifamily. One of them was from Berkadia, which they do an annual multifamily forecast. I think another one was from CoStar, which is another data analytics company that also owns apartments.com. So they could see, they own apartments.com, and they could see what people are renting the units for. And so I pull it from a variety of places. And that's the thing. I'm like a student of the game. I do know a lot, but I study a lot of the trends and read a lot of the reports, and then I consolidate them so that you don't have to.
Yes, that data is always important too. Let's see here. Jimmy wants to know, Houston showed negative 0.80 for occupancy in March 2021. Can you share some feedback on that? Why that might have decreased this year?
Yeah, well, Houston actually went through I think Houston got hit a little harder with the pandemic than some of the other markets. And we also had some impact on oil. Now, Houston, look, I've lived here for 19 years in the past, and Houston is not it's more diversified than most people think, but it does still have a high oil component. So, like you take a market like Dallas, that's a more diversified economy. So Houston had some down points, but I can tell you when I mean down points in terms of performance, like KPIs, like rent and occupancy, we saw some negative movement. But I'll tell you what that meant for me is I want to buy in Houston right now, because you want to buy when the market's down. You don't want to buy when the market's up. Now that statement in itself, I'm going to couch, because the market in general is up everywhere. But the thing is like you can't necessarily time the market, but you want to understand the market. So like I've lived in Houston 19 years, and if I see a dip, and the other thing is like this A-class deal we bought in Houston, all the institutions fled Houston. They're like, oh, we're not buying in Houston right now because the economy is down here. Well, I know that's the time to buy. Mm-hmm. That's the time to buy. You want to buy real estate for sale right now. Houston is on sale. Dallas isn't. I'm just telling you, Houston is on sale. Dallas isn't. Mm-hmm. You get in Dallas, you get, so maybe you could say, well, Houston's a little bit more risky because, you're buying on the downturn, and Dallas is a more expensive market right now because we didn't see that downturn. And so people have more certainty and they have a more security in Dallas because it didn't have the same downturn as Houston. But see, I'm buying in both. I'm looking at Houston saying, man, I could get stuff now that I couldn't have got before at the same price. And I'm still buying in Dallas because I'm betting on Dallas. And look, you saw the charts. Dallas and Houston are the number 1 and 2 markets for job and population growth over the next 5 years. And that's a very important metric.
Mm-hmm. It is. Yeah. I personally think population growth alone is going to continue driving this. Kind of like you said, everyone's waiting for the bubble to burst, but I don't think that's going to happen because people are still moving here, and they're moving here in the thousands each week. Next question here.
Let me say, could I add to that? I flew to Houston from Dallas, and I flew yesterday, and the plane was packed. Mm-hmm. And then I used to live in Houston for 19 years. Okay. And it's never stopped growing. So the plane is packed. I get in line to my car rental. Unfortunately, I'm a Hertz Platinum, so I just walk out into the parking lot. Every car rental counter was packed. I mean, if I had to stand and wait in line at the dollar thrifty counter, there were over 100 people in line. And then trying to get out of the rental car garage, I waited. There were 3 lines of traffic, like 3 checkout lines to leave the rental car. And I was number 12 or 13. I have never waited that long in my life to get out of the rental car garage. Mm-hmm. And I got to the rental car guy who checked my contract, and I said, what is going on here? And he goes, it's been like this almost every day. He goes, there's so many people moving here. There's so many people coming here. I couldn't believe it. And then the traffic here is, look, I lived in Houston 19 years. The traffic here is horrendous. And it's even worse now, but they just keep building more. They just keep expanding the highways. Like Houston is on sale right now. And, it's a great market. Mm-hmm.
It is. I agree 100% there. This is a good question here. Do you suggest starting as a passive if you only have 10 to 20,000 to invest?
Well, it depends. Like 10 to 20,000, like the minimum to get into a lot of deals is like 25 to 50. Mm-hmm. And so I would, I don't know this person's situation, but what I found is most people, if they look hard enough, they could come up with more than that. And especially if they look in places like their home equity, like, we've all been taught to like pay off our home and get out of debt. And so you're paying off all your debt, but that's not putting money in your pocket. You're paying off your home. That's not put money on your pocket. I would say if you have home equity, get some of that equity out and invest your money in something that's going to make you money. So, if you have 10 or 20,000, this is going to sound counterintuitive, but it would be almost easier to do your own deal and get in as a GP and add value to a GP group and raise some money and find a deal and analyze the deal and add value that way, than to be an LP with 10 or 20,000. Because if you put 10 or 20,000 into somebody's deal, it's not really moving the needle on their capital raise.
Mm-hmm. Exactly. And that was another really common question that we had here. What are the typical minimums for passively investing into these deals? And I think you just answered that. They're typically around 25 to 50,000. Anything else you want to add to that, just since a lot of people have been asking?
Yeah, I mean, the minimum is really set by the GP group, or like what I would say, the sponsorship group. And it comes down to, like, if I'm doing a $10 million raise and I have $100,000 minimum, most people gravitate to the minimum. So I'm going to have, 100 investors at $100,000. If I lower it to 50, now I have 200 investors. And so it's just, and then it comes down to, well, who's doing the paperwork? Do I need to hire an admin person to handle all those investors and all the paperwork, or do I have an automated system, or don't I? And so ultimately, it just comes down to the balance between, your total capital raise and the systems you have in place and the people you have on your team or not, and how many investors that you have access to.
Mm-hmm. Exactly. Great points to add on to there. We'll do just a couple more questions here. I know the answer to this one, but I love to hear you explain it. Do you hold any single family real estate in your portfolio? Why or why not?
Zero.
And I think it was only ever one at one time, right? And then you said, nope, we're doing multifamily.
That's correct. I owned one single family rental one time. Mm-hmm. And but why is, like, look, there's single family isn't bad. It's not wrong. But why I learned how to do multifamily from the beginning. And so, like, look, it takes time and energy and effort to learn how to do single family. Mm-hmm. And it takes time, energy, and effort to learn how to do multifamily. And you could, if you're one of the people out there listening to me right now and you haven't gotten into either yet, you could go right into multifamily. And or if you're doing single family, you just switch your focus.
Mm-hmm. Definitely. And I want to kind of touch on that for a second too, because you do a lot of mentorship for both passive investors and people who are looking to become general partners as well. Could you maybe walk us through a little bit about that? How does someone get involved with you if they want to learn more, if they're looking for those mentorship opportunities? Where can they find those? Where should they start? I think that's maybe a great point to maybe start to wrap up today with.
Yeah, I mean, look, so there's so many ways. So I talked a lot about AIM NatCon in July. That's a 3-day in-person event where you're going to be immersed with not only me, but my mentors. Haley, you mentioned the free challenge I'm doing starting next Monday.
Yes.
90 minutes a day where we're going to have a lot of free content, and you'll get a lot out of that event, and it costs you nothing except your time. You could go to my website, bradsumrock.com. And we have mentoring programs. We have a program more designed for passive investors, and we have one designed for GPs. So I would just say, look, if anybody wants mentoring and is interested, like, I'll just put in my personal email, and it doesn't take a rocket scientist to figure that out. But if you're serious about, wanting to get into be a GP in a deal, and want to know what it would take for you to be in our mentorship program, just email me and I'll have me or someone on my team get with you.
Mm-hmm. Yes, definitely. And I will say you have a fantastic team. They're always a joy to work with, especially Crystalie. She does so much for you guys. And she's a great point of contact for me as well. So Brad, we do have a few other questions here, but just due to time purposes, let's go ahead and wrap it up today. If y'all have more questions that were maybe a bit more specific that we weren't able to answer today, be sure to email Brad at bradsumrock.com. Him or someone from his team will reach out to you to get those answered. But before we sign off, Brad, if you had one last final piece of advice for our audience out there today, what would you share with us just to kind of wrap it up for the day?
Well, look, I didn't know that you were going to ask me that. And then I'm glad you didn't ask me like, what was the last book I read or
Nope.
yeah, like the podcasters do that. Oh, what was the last book you read? But look, here's the deal. Your success is going to be mainly determined by a few things. And one are the actions you take. And two are the people that you spend your time with. And again, so there's going to be people here that, you've already taken action and you're already successful. But there's going to be people here that are going to take action and they're going to come on our challenge or come to AIMMACON or both. And they're going to level up and want to be mentored, or maybe they'll come into a mastermind program like ours or somebody else's. But you got to you got to take action and seek out constant mentorship. And you surround yourself with people that are doing what it is that you want to do. So that's it.
Mm-hmm. Awesome, Brad. Well, great way to wrap up the class today. And thank you so much for taking time out of your busy traveling schedule to come join us online from your hotel room, probably not too far from me here in Houston, actually. So guys, be sure to register for the challenge. I've put that link in the chat several times. I will be there next week, all week, joining live, and it's going to be some great information. So y'all be sure to join as well. And I'll see you at NatCon as well. Brad, thank you so much. Have a great week and safe travels to you.
Thank you very much. And I enjoyed it. For everyone listening out there, thank you for being such a great audience.
Mm-hmm. Awesome. Thanks, everyone. Y'all have a great weekend.